Your taxes are going to go up after 2025 and how to avoid this. Now, regardless of who will be elected president in 2024, your taxes are going to go up. Presidential election time is here. Tons of people are shouting back and forth of what they think each candidate's policy on taxes are. Now, there's a ton of misinformation and a ton of speculation, as neither candidate will know if their tax stances will pass muster or if it will pass the House if they get into office. So let's just talk about what we do know. We know that your taxes, if nothing changes, will go up. So if you are a business owner and want to be prepared for these tax changes, keep watching to the end. Now, as your friendly tax strategist and accounting firm owner, I'm here to set a few things straight. So stay tuned and watch until the end of this to see what it's all about. How's it going, friend? My name is Eric Niem, and I am an accounting firm owner and a tax strategist that helps high-growth companies and entrepreneurs with their finances. I'm also, self-admittedly, a complete tax nerd. Okay, so in 2017, when Trump was in office, he passed a tax bill called the Tax Cuts and Jobs Act, or TCJA for short. Now, there were a number of provisions in the bill that gave many temporary tax cuts, but also set an expiration date for some of those tax cuts. Now, some of the key provisions were expanded standard deductions, a child tax credit in lieu of personal and dependent exemptions, wider tax brackets, and lower rates. The TCJA also reduced the alternative minimum tax and the ability for business owners to take bonus depreciation on large assets. Corporate taxes were also lowered from 35% to 21%. Small business owners were able to take a great tax break called the qualified business income deduction. And surprise, surprise, all of those expire at the end of 2025. Now, the challenge with a lot of these tax cuts is that it will cost the government an estimated $4 trillion over the next 10 years if Congress was to extend these tax breaks. Now, while I believe that in a balanced budget, you must both include an increase in tax collections and a reduction in spend of government expenses, we all know that this is politically unpopular. That said, regardless of who comes into office in 2025, here are the main pieces that will expire for business owners after 2025. First, the 21% corporate tax rate for C corporations will expire. Now, before TCJA, the tax rate was 35% up until 2017. Now, the Harris campaign is proposing to bring the corporate tax rate from 21 to 28%. Now, from a budget perspective, the cut of corporate tax rates was one of the most expensive parts of this law. What this means for you is if you're using a C corporation as a tax planning strategy, it's no longer as tax advantaged as they used to be. If you're using a C corp as a tax planning tool, it's definitely going to make sense to look at it more deeply and determine if it's still a relevant strategy with the changing times. Next, the qualified business income tax deduction for pass-through entity business owners is set to expire. Under TCJA, single filers under $191,000 of income and $383,000 for joint filers are able to deduct 20% of their qualified business income. Now, by reducing the amount of income subject to tax, the 20% tax deduction effectively lowers the top tax rate on pass-through business income from 37% to 29.6%. Most of the nation's small businesses are organized as pass-through entities. Nearly 26 million individual tax returns claimed this pass-through entity tax deduction in 2021. And many of us, like you and I, will be directly affected by the expiration of this. If you're a small business tax owner, you'll want to start adjusting your estimated tax payments starting in 2026. Now, finally some good news. The limitations of standard deductions are also set to expire. Employee business expenses were phased out, which means W-2 employees that are paid for or had large out-of-pocket expenses like tools, union dues, travel costs will finally be able to deduct them again. Also, the state and income tax deduction limits will also expire, allowing taxpayers in high property and high income tax states to be able to deduct more than a $10,000 cap on combined state income tax and property tax. So what does this all mean to you? Well, if you're a business owner, it's time to start doing some strategic tax planning. It's also time to start updating your tax plan. I always find that those who are educated and are productive in their tax planning will often do very well when tax codes change. Be proactive, prepare for the worst, hope for the best. If you enjoyed this video, make sure to give it a thumbs up and share it with a friend. If you're concerned about the shifting landscape of small business taxes, click on the link in my bio for a free report on the top 10 tax strategies that we implement with our wealthy clients. Thanks for watching. Keep your head up, keep building, and I'll see you again soon.